Hello guys, and welcome to another Q&A on Coin Bureau Clips. As you can see, it's just me here today. Guy's away for Christmas, and Jessica was involved in a really late night interview that is coming out on the main channel pretty soon, so keep your eyes peeled for that. So yeah, unfortunately it's just me here today, but be that as it may, Q&A is going to go on. As you know what happens with Q&A every single week, and about halfway through the week, we post on Instagram asking everyone to submit their questions. And at the end of the week, we try to answer as many of them as possible. So we'll link to the Instagram down below. And of course, if you guys like these, please do like and subscribe. And with that out of the way, let's dive right in with the first question. And this is all about the Solana summer. SAB6 is asking, what's the reason behind Sol's rise? You know, the sun rising on Sol this summer. Okay, so I think that obviously it's hard to really pinpoint one particular thing because there's a number of things that have been happening in the Solana ecosystem, and some of it even predates the actual rally that we've seen in the past, quarter. I think, for example, one of the few things that happened at the beginning of the year on the tech side and tech upgrade side was localized fee markets that would deal with particular hotspots on the Solana network and would reduce bot spam and congestion. Another was state compression that allowed for much cheaper NFT mints. So NFTs were being minted at a much cheaper price now. And then, of course, there's also the Neon EVM, which would allow for Solana blockchain to be interoperable with numerous other EVM chains. And of course, there was updates from Visa, for instance. They said they were going to be testing USDC payments out on the Solana network. Then all this development showed an interest leading up to, Breakpoint, right? So Breakpoint was this massive, event that took place where the Solana developer event, where there was just so much excitement, so much enthusiasm. A lot of people were talking about what was being built on the Solana ecosystem, a lot of talks. It was really, really a formative time for Solana coming out of, a lot of the FUD that had been circulating specifically around FTX selling, which was one of the biggest outliers there in questions around what was going to happen with Solana. Would FTX dump their Solana to be able to, pay for their creditors? And it seems that FUD has actually kind of subsided a bit because of a few factors. I think one is you got to know that most of the SOL that's been held by FTX is locked till at least 2025. So what that basically means is that, a lot can happen within the next, year or so until they'd actually be unlocked and be able to sell if they wanted. But more to the point, it's like, do they even have to sell that SOL? Because FTX had had a big investment, for instance. Although there was a lot of shitty investments, a really good one was Anthropic, which was a AI startup, which is worth multiple billions right now. They could potentially use that to pay back their creditors. But also, there's the chance that very likely FTX could be restarted next year. And in a bull market, how much an exchange can make? Multiple billions. And if it's doing very well, most likely it could be able to pay back the creditors. So the question of if it even needs to sell its SOL is no longer on the table, even in 2025. So that FUD has subsided. And then there's just been a lot of excitement on the institutional side for Solana, for instance. I mean, for one, you have to take a look at, flows into Solana products, investment products, right? For instance, about a month ago, the Solana Grayscale Trust was trading at get this, 800% premium to the net asset value within the actual Solana Trust itself. So that's crazy. Also, we saw CoinShares that had one of the biggest flows into one of their ETP investment products after Bitcoin. It actually was Solana that overtook Ethereum. And then we also had the likes of Cathie Wood. She was shilling Solana, saying, Solana is going to become, it's faster and cheaper than Ethereum, so it's going to be the new alt layer one that's going to take over. You also had Van Eck release a price prediction institutional report, a very in-depth price prediction institutional report that said SOL could be at the top end of their range by 2030, could reach $3,200. So there was just all of this excitement on the institutional side from an investment perspective. Speaking of Van Eck, they actually just released their top 20 crypto predictions for 2024, and one of them is that Solana TVL will continue to outpace the growth in Ethereum's run. So at the beginning of the year, we saw SOL TVL was at about 200 million. It's now at about 1 billion. So that's a 5x increase in TVL over the past year. So if it continues growing in the new year, that's obviously excitement for the Solana ecosystem. It means people are building on it, securing their blockchains with it, their dApps with it. And then, of course, it's not just that. There's the fact that there's tech upgrades that are coming to Solana that many people are excited about. One I've talked about before is, of course, FireDancer. So it's a new validator client that will allow for more diversified validators, which means that not only is FireDancer itself going to be highly performant and for speed, but also it's a lot easier to run in terms of like hardware requirements. So that will obviously decentralize the network more because more people can actually run Solana validators. And there's also other factors, like lots of users are using Sol. We've had 1 million unique addresses, which is double what it was last year. So, and also, I think that Visa's also, like I mentioned, there was the Visa partnership. Visa was launching USDC on Solana network, and the fact that this is happening obviously means that Solana can become the network for payments potentially. There's a lot of the factors behind Sol's rise. Now, I think that there's another question that kind of ties into this, which was from Jerison Fenter, and he asks, what do you think is a reasonable max market cap for best performing altcoin behind ETH in the next bull run? So, this ties into Solana because if you watched our main channel video on Solana, you will have seen our analysis on where we think Sol could go from a market cap and price perspective. So I think that if you were to assume that, the predominant altcoins after the main coin follows in cycles. So if Solana was to reach in this cycle, reach a market cap, the same market cap of what ETH reached in the previous cycle, bull cycle, that was about $500 billion in market cap, which would translate to about $1,200 for Solana or Sol. So, that's about a 17x from now. Okay, it's our analysis from the Coin Bureau in our video, and you can take a look at that and come to your own conclusions, but that's what we're out there in terms of what Sol could potentially do, assuming all these factors that continues to build on it, and the developer excitement continues, which I don't see any reason why it shouldn't. That's what we could potentially be seeing for Sol in the next cycle.
Sorry to interrupt you folks, but I have to let you know about the Coin Bureau deals page. Now, my team and I have been able to pull together some of the best promos and discounts in the crypto space. We're talking trading fee discounts of over 50%. Thousands of dollars in bonus airdrops, amazing deals at top exchanges, reduced prices on hardware wallets, and much, much more besides. So just go to coinbureau.com/deals, also linked to below, and find the promo suited to you. Enjoy the rest of the video.
So cool, that was the Solana questions. Moving on now to Eduardo Dreamer, and he asks, could we see a longer bull market for Bitcoin after ETF approval as we did with gold? Okay, so that's an interesting question because if you take a look, and I'll share a chart with you guys, and basically if you take a look at what happened to the price of gold out of the gold ETF or gold shares ETF that launched in 2004, it went on a parabolic bull run for numerous years after that, up till 2012 at least. And the question here is obviously yes, will this potential inflows from ETFs and Bitcoin ETFs invalidate the Bitcoin market cycle potentially, i.e. an extended bull run? And the reason it's potentially applicable to the gold ETF is not just because gold and Bitcoin are viewed as kind of like similar investment types in terms of like diversification, but also because Bitcoin could potentially take from the gold investors in terms of like if there's an ETF, those investors in commodity funds who've been investing in gold could be investing in Bitcoin as a diversification hedge. So there's a number of reports out there that have tried to analyze the impact of Bitcoin investments from an ETF perspective using the gold analogy from the previous ETF. Come back to those Van Eck predictions. They took a look at what was the inflow to the gold ETF out of the launch in 2004 and tried to come to some sort of a conclusion around what it could look like for Bitcoin now, taking into account factors such as how more advanced the market is, taking into account the M2 money supply growth. For example, the M2 money supply since 2004, it is almost 3.3x, right? So the case and demand for an alternative hedge to, the inflationary environment we could be facing right now is, of course, not just gold, but of course Bitcoin. So they come to an analysis by, for example, that inflows into Bitcoin ETFs could be over the next 2 years, using these metrics, be about $40 billion over the next 2 years. There have been similar analysis out there that's looked from Galaxy Digital, for instance, which has looked at Bitcoin inflows over the next few months after the ETF approvals, and could see about 1% to 2% price impact per month. And there was also a Bitwise report that was released just yesterday on price predictions as well, and predictions in general. And they said that within 5 years, Bitcoin ETFs could capture 1% of the entire ETF market. So that's about, if the current ETF market is 7.2 trillion, that's about $72 billion. And that could happen over 5 years. So, take that information as do with it what you will. Will this lead to an extended bull market that could invalidate bull market cycles? Potentially. I mean, of course, it also depends on what the macro environment looks like. As we know, there's going towards a pivot next year, which could mean more liquidity coming in. If inflation comes down, does this mean that there's going to be less demand for inflation hedges? I don't know. So there's a few factors out there to consider, but there's no doubt that this ETF approval is going to be going to change the market structure greatly, such that there'll be a lot more opportunity for investment from numerous different types of investors, from retail, your institutional, etc. The next question we have, and this is from CyberWin777, and he asks, what narrative could get the most hype and attention in the next bull run? AI, metaverse, gaming, or layer 2? Now, we've got a video coming out on the main channel about the top narratives to watch in 2024. So I don't want to spill the beans too much on that one. However, I'm okay to talk about two of them because I've talked about them before, and I think they are sectors and narratives that are pretty bullish on in general for the next bull run. So, first one is most importantly, I think, is GameFi, and there's a number of reasons why. I think for one, there's a lot of the gaming studio. Think about the gaming ecosystem right now, and gaming studios. They've had tightened profitability and profit margins since they've come out of the pandemic, and the game studios have had to release a lot of developers. So they're obviously going to be looking for new ways in order to monetize and make money and increase their profitability. One of them is, of course, thinking about in-game currencies. But the problem with that is if they've got their own in-game currency that's kind of like within their walled garden or has to rely on centralized third parties, then that could create problems for them. One of them, an example that I can give is, of course, the V-Bucks situation with Fortnite and Apple iTunes, right, where they basically were delisted because they said they can't have their own in-game currency. And that's just one example, but there's many examples out there where games would have to be reliant on the traditional financial system for any sort of in-game currencies, which is naturally where blockchain games and blockchain ecosystem comes into strength. And I think that, for instance, another reason that games and GameFi, in terms of the previous bull market, not too many people thought about it, was because the games that came out were really bad quality, weren't really fun to play. And this is true. The games looked very like rudimentary, and they weren't really about the enjoyment of the game. They were just about Ponzi-nomics. But also, what you've got to appreciate is that some of the best games that are coming out now were being built in the previous bull market. Like really good games take at least 4 to 5 years to develop, and a number of the games that are launching right now, a few I've mentioned, but a few others. I mean, for instance, I've talked about Shrapnel. It's been building for the past 4 years. Big Time it launched in 2020. So there've been developers, and these are games that were developed by gamers for gamers, right? So they were developed specifically to be playable, and I've seen some of the action play within these games, and it looks super exciting. It's something that I would actually consider playing these games. Another game I saw and came across yesterday was Off the Grid. And you've got to take a look at the gameplay here as well. It was pretty amazing. So these are some of the games that are coming out, and these are really playable games. And on top of that, in terms of the GameFi narrative, you have to consider the fact that games have to be building on scalable technology, right? And if you're thinking about the Ethereum ecosystem, Immutable X is another one to consider because it's a layer 2 for gaming, specifically developed for gaming. There's a lot of games building and big titles being built on this L2 right now, and Mutable's made it a lot easier for games to be built because of the passport system and the much improved user experience. So that's a really interesting project to watch, Mutable X. So GameFi it's a bullish narrative. If you're also talking not just about layer 2s, layer 1s that have exciting lots of games we built on them. One of them is, of course, Avalanche. I've talked about Avalanche a lot. I hold in my personal portfolio. Both Shrapnel and Off the Grid are built on Avalanche on the subnets. So that's an important L1 to watch if you're into gaming and the GameFi narrative. So that is the GameFi narrative. And the other one to watch for 2024 is RWAs, or real world assets. I think that it's actually interesting because RWAs, or securitized tokens, weren't really talked about. If you think back to 2017, if you were in the 2017 cycle, security tokens were a big thing. There was a lot of excitement around securitizing normal assets, right? So the likes of the exchanges like T0, projects like Polymath, there were a number of projects and exchanges and protocols that were building securitized token issuance. However, in the 2020 to 2021 cycle, there wasn't much excitement about this anymore. But now it seems to be coming back to the fore, and that's because I think people have realized that the importance of, tokenized, the value of having a tokenized real world asset, right? For it's easy to register, it's fully permissionless, it's completely transparent, and it's easy to store these assets and represented straight on a blockchain. So there's already about $5.5 billion that has been tokenized in RWAs, and I'll put it basically linked to a graph that shows the growth of RWAs or RWA assets over the past year. And according to the Global Financial Markets Association, they estimate that by 2030, at least 16 trillion of tokenized assets will exist as RWAs. So that's exciting. And of course, there's been a few recent examples. There was one, for instance, SocGen just issued a bond, or 10 million euro bond, as a tokenized bond. We had news that Deutsche Bank did the same yesterday or 2 days ago. And then another really big example is JP Morgan with their Onyx blockchain, which has utilized another Avalanche subnet to connect to Wisdom Tree's tokenized funds. And this was done with the Ministry of Finance in Singapore as a proof of condition. So obviously, if traditional financial institutions want to start tokenizing funds and tokenizing assets, they'll utilize this model and this proof of condition. And that's another reason why I'm particularly excited about Avalanche, right? As another use case beyond just gaming is the building of RWAs. In terms of specific RWA plays, I asked people on Twitter yesterday to suggest some interesting RWA projects. There are quite a few. If you want to submit some, please, I'll link to my Twitter below, and you can give me your comments as well. We always want to look into these exciting projects, and if RWAs is going to be an exciting narrative for the next bull run, it's one that it's one that we want to focus on and look at the exciting projects building there. Of course, there's a few other narratives. I don't want to give too much away, so if you want to see our video, it'll be out probably in the next 2 to 3 days. So keep your eyes peeled for that. Time for the next question. And this is from Antonis Sparisonis. Sorry if I didn't pronounce that correctly, my man. And he's asking, how bullish are you on PYTH Network? Well, the direct answer is bullish AF. Yeah, so basically I hold in my personal portfolio. I've talked about it a few times. We actually did a video on it that was on the Coin Bureau Club. So, if you watch and you're part of the member of the Coin Bureau Club, you will have seen it. But after I watched that video, I'd done research about PYTH Network before, but after I'd watched the video and we'd seen the analysis, I was like, I need to pick up my own PYTH. So I picked up PYTH last week and hold in my portfolio. And I think you have to understand exactly why PYTH Network is, why we're so bullish and why it's such an exciting project. And that's because it can become the predominant oracle in DeFi. And it's like a highly performant, low latency, high frequency oracle, one that can basically refresh prices every 400 milliseconds, which is very important from the perspective of providing correct and up-to-date information for all the dApps being built within DeFi. If you think about it, one of the biggest risks that we faced in the past with regards to oracles was oracle manipulation, which is a common DeFi exploit. But that's just because some of these oracles were relatively easy to manipulate, and because price updates were very slow. So that's why it was a common attack vector. But PYTH Network is basically, it's a lot faster, it's a lot more frequent, and there's already like 90 different data providers that are providing data for the PYTH Network itself, and these are big financial institutions, the likes of 2 Sigma, Jump Trading, Jane Street, CNBC, data providers like that. And it's also interoperable with 40 plus blockchains, right? So it's expanded out greatly from just the Solana ecosystem. So, I think that all of those factors, and then of course there's the fact around how they deal with the questions around the reliability of the data, whereas other oracles look at, circuit breakers. PYTH looks at something called the confidence interval, so you can kind of like make an assessment of how accurate the data is being fed into your dApps. Basically in terms of like right now, the PYTH token itself, it's basically only really been used for governance. So the questions around utility use cases for PYTH network right now in terms of the PYTH token is not really been laid out, but in terms of their roadmap and what's been placed in their white paper, the goal is to be able to use PYTH token as a utility token within that ecosystem to pay for, not only for staking, but also to pay for transactions, fees for actually getting data and pay the data providers in PYTH, to give them, to pay for the data that's been fed to them. I think that I will, of course, refer you to the video if you want to get like a full in-depth review and analysis of it and see why we're so bullish. But just to give you a bit of a teaser, I think, for instance, if we were to assume that PYTHnet does eventually launch and goes public and it does become the predominant oracle in DeFi, and that PYTH is used as the native currency to be able to pay these data providers, it's entirely likely we could see, PYTH, almost doing a 50x. Of course, that's based on all those factors, and we'll caveat with that. And I encourage you to actually go and watch the video to form your own analysis. But yeah, I think that that's part of the bull case for PYTH and why I've added it to my portfolio. And there are some, of course, risks, as there are with anything. In terms of PYTH specifically, I think that only about 15% of the total supply is out there in the market circulating. Remember, it's taken a lot of VC backing. So when it comes to these very aggressive cliffs they do have, you have to watch out for those, keep an eye on those vesting schedules. And yeah, I guess there is another question around potential centralization. Although, they have got 90 plus different data providers providing the data, these are large traditional financial institutions. So you have to ask yourself, could there ever be an incentive for them to potentially provide incorrect information? And the fact that it's just a lot of Wall Street is back in this project, which naturally most crypto natives would view skeptically. I think that, but those are the factors to consider when you're thinking about PYTH. But yeah, more generally, very bullish on the project, and I think that it's got a lot of potential. Okay, moving on to the next question, and this is from Jerison Fetter, and I assume this is a rhetorical question because he's asking, would you be ever comfortable Shilling and small cap altcoin, or do it even before launch at Coin Bureau? Now, obviously, if you're any sort of a Coin Bureau fan, you'd probably know the answer to this question. But in case it isn't obvious, I'll say categorically and absolutely and equivocally, no, definitely not. Firstly, I don't like the word shilling, for instance, or shill, because we don't do any of that. What we basically do is provide you with the information to be able to make your own decision around what you want to do with your investments. Give you a full, impartial overview of a project, a coin or token, and you can decide whether you think it's worth you investing or not. We never tell you, go and buy this token. We never tell you you need to buy right now, this is the coin to get in on. That's not what we do. And it's part of the reason also about why we stopped covering small or even mid-cap altcoins on the channel, because if I think back to what we used to do in the altcoin coverage space in the previous bull market, what you would have seen was even like if we just release a video on any sort of, even if it's an altcoin that's near the top 50, just by releasing the video, because people naturally just want to go and YOLO and buy whatever video we release, you can see it has an impact on price. And sometimes people would even run bots. When the video is released, they'll run bots to basically see if we've mentioned a particular altcoin, and this would impact the price. And this made us incredibly uncomfortable because we're not interested in actually having any sort of market impact or market manipulation. We don't want to be out there telling people, making it look as if we at any way having an impact on the price of a coin or token. So that's exactly one of the reasons why we've decided, in order to be able to cover these smaller and mid-cap altcoins, why we have the Coin Bureau Club. It's not public. it's a smaller group of people who can see our full in-depth analysis without fear or favor, and then they can make their own minds up about it, and we can't be accused of trying to shill anything or impact any price in any description. And naturally, as is the case, if we continue covering any sort of altcoin or coins on the channel or in any of our sort of forums and in the club, it's fully disclosed. In the club, we've got our portfolios there. You can see exactly what we hold. And if we ever hold a particular coin or token and we talk about it in any description, we're going to fully disclose it. And I think that that's most important for us. We want to be completely transparent, and we want to give you guys the information to make your own decisions. We're not here to change and influence people's decisions. We're here to give information. We're not influencers. We are educators, right? So I think that one way we think about the way we work with the channel and our business, ethos as well, is that it takes years to build a reputation, and it can be destroyed in an instant. So yeah, we take our reputation very seriously, and so no, we would never be comfortable shilling any sort of altcoins before the launch at Coin Bureau. But yeah, I assume you already knew that if you were a fan and you've been following for quite some time. Next question, and this is from Aviator Guarav, and he asks, XRP price prediction, next bull run. Got to have some questions in there from the XRP army. Well, I mean, this guy's an aviator, so I assume he's in the Air Force, the XRP Air Force. So I guess this question relates more particularly to will XRP ever see its previous all-time highs that we reached back in the 2017 cycle? And it's an interesting one. I guess there is a lot of buying. There needs to be a lot of buying pressure to push XRP up to there, because it's got a lot of circulating supply already out, like a large circulating supply, about 52 billion. And whether there is enough buying pressure to do that, I think really depends on a number of factors that's out there now for Ripple as a company, more specifically. For instance, there's the question around the SEC case against Ripple. Will they settle? This is a big, outstanding factor that many people have been following. It seems likely they could settle soon. How big the settlement is, there's estimates out there, and it could be, reasonable. But once it's settled, it clears a lot of the FUD that existed prior to this with regards to XRP. And I think that if that does happen, then there's also the potential for Ripple, the company, to IPO. And if if Ripple does IPO, a lot of capital will be available for the company itself to be able to expand operations. And it also doesn't have to use or to fund its operations through XRP sales, right? Because remember, that was one of the prime examples of which Ripple, the company, would be able to generate cash to expand operations and also fight the SEC was through potential XRP sales. And if they don't have to sell XRP anymore to their clients, then they won't need, then that's not going to impact too much on the price. And it's only, the question then becomes, what sort of, will the partnerships that Ripple and the clients Ripple is onboarding to RippleNet, and more specifically to ODL, its on-demand liquidity product, is will they be able to onboard a lot more clients? Because remember, ODL is the only product that Ripple uses and provides to clients that utilizes XRP, right? Obviously, if they have a lot of clients being onboarded that are utilizing the ODL, this is going to mean they're going to have to buy XRP to be able to meet the liquidity. And if Ripple isn't selling anymore, they'll have to get on the open market, potential positive for the price. There's been a number of clients that Ripple has onboarded. In the Middle East, for instance, they got a license out of the Central Bank of Singapore to onboard financial institutions over there. So there's a lot of potential clients that Ripple can onboard, which will utilize ODL and RippleNet. But on the retail side, I think that Ripple has XRP has a diehard community, and that in a bull market, a community can drive a project forward and also just help to keep the price, help to sustain the price levels, right? And it's one of the strongest communities out there. Ripple and XRP has staying power, right? Since 2017, it's been one of the consistent, coins in terms of the top market cap rankings. So, yeah, I think that there's a lot of excitement around XRP in the next bull market. Whether it can reach the all-time highs, I think it's possible, depending on all these factors I've just mentioned. There are still risks, of course, with Ripple and XRP. I think one of them, and a question I had is more like, firstly, it's like we have to first of all see what the SEC settlement is going to be, right? And also whether they're going to settle soon, right? Because there's still this, potential cloud hanging over the heads of the XRP community. Once that's settled, that's great, but they first have to see what the settlement is and whether the SEC will either settle. And then I think there's also a question around, is Ripple really going to be, or is XRP really going to become, and Ripple going to become the company that's going to develop this banker's coin that's going to allow all these financial institutions to, replace SWIFT? And yes, it should be, but we must not forget that banks are trying to launch CBDCs, right? Central banks are trying to launch CBDCs. So, is now Ripple's biggest competitor going to be the coins that are being developed by the large central banks themselves? I mean, that's an interesting question. So yeah, that's a potential risk. But if you guys want more of an update, obviously we've also got a review of XRP on the Coin Bureau Club. It was one of our first reviews. So yeah, you can go and watch that if you're a member as well. Okay, next question is from Happy Place 233. A happy place. And he asked, or she or who, will the DeFi sector be popular in the next bull run as the previous one? Now, yeah, that's an interesting one, because I was also thinking, so if I think back to the 2020 DeFi summer, the year of yield farming, airdrops, liquidity provision, thinking back to the early uni airdrops, Yearn Finance, for instance, like Yearn Finance, Yearn at Wi-Fi during that DeFi summer actually overtook Bitcoin in terms of price. It was crazy. And there was just a lot of excitement around DeFi at that stage. Think back to, for instance, there were like all these food farming protocols where basically people would farm these meme food coins. It was a really crazy time. And now the question is, of course, and there was a lot of development done as well in terms of like tech and a lot of exciting projects. That's when Uniswap, DYDX, all these really big Ethereum DeFi protocols launched in those days. RWA switched from being, RWA launched as a new name, and RWA itself came out within that bull market. It used to be ETHLend and rebranded to RWA, and then there was a lot of excitement around what was happening in the RWA ecosystem. So yeah, DeFi summer 2020 was amazing. But will we see something similar in the next bull run? I don't know. I think this is, and this is potentially why DeFi wasn't one of the narratives we're particularly excited about for the next bull run, and that's because of regulations, guys, unfortunately. The regulations are not looking too good. I mean, there's definitely the case to be made that regulators want to clank down on DeFi, or more specifically, non-custodial permissionless finance. And more recently, for instance, about a few days ago, we had Liz Warren release her latest attempt to crush the crypto industry, a bill, which we all hope, though, it's just Liz Warren, she's just got a beef with the crypto industry, she's literally, crazy screaming lady, but it seems like this actually has a pretty strong, support in terms of this bill. It's got 9 co-sponsors, which is bipartisan. So there's a little bit of worry about this particular bill. I think that the bill itself has been, according to Coin Center, the bill has been deliberately crafted to make permissionless blockchains unavailable to Americans by forcing all validators and developers of these networks to gate and surveil their infrastructure. So basically, yeah, what it would require is if you're a developer, you run a node of any description, you're building on a dApp, or you even utilize, you have to register as a financial institution. So if you run a Raspberry Pi, running a Bitcoin node, and you have to basically register as a financial institution. You're an ETH validator, financial institution, go register. You're developing code for a DeFi protocol, go and register as a financial institution. I mean, it's crazy. So it forces all these, any sort of unhosted wallet software to go and basically approve their code and become a registered financial institution. So that obviously could put a big chill on DeFi development, and could obviously have a massive impact on people building within, the DeFi, building on DeFi in general, and also more specifically in the US, because that's where a lot of liquidity is and where a lot of developers are. We hope that this bill itself won't pass. I think that there's a few arguments out there that it could potentially be unconstitutional because of the fact that it would require these potential financial institutions, whoever they are, to collect all this information on their clients, which could be in breach of the Fourth Amendment of the Constitution. But irrespective of whether it's just this particular bill or the point is that there has just been this push to regulate DeFi, right, and make it very difficult for people to use DeFi as is intended in a permissionless and in a permissionless manner. Think about the Treasury. Think about OFAC sanctioning a smart contract address with Tornado Cash. All these things. So yeah, there are risks to DeFi in the next cycle. And another narrative I've seen is potentially, and if you've been following developments with Uniswap, they've released these KYC hooks, which would allow for permissioned, fully KYC'd DeFi to be used by financial institutions. The thought there being, well, they'll be way more comfortable to use DeFi and to work on and to build DeFi dApps and operate with these protocols if they know it's fully regulated, and if they know that there's no chance of any sort of sanctioned addresses interacting with these contracts or them being a counterparty to it. And it is a fair point. I think that if there are large financial institutions that want to utilize DeFi but have been worried because of these potential questions around who they could be interacting with, and there is a permissioned version of DeFi that is fully KYC, they could be comfortable to do it. And yes, there could be a large drive from these financial institutions to do it. But then the question is, where does that leave us? So where does that leave, the DeFi natives, the DeFi degans, the people who actually built this ecosystem? Is it another example of the traditional financial system just being taking over another part of the crypto sector we hold dear? So yeah, it is yes, it could potentially be bullish if you think about it from the perspective of more demand to use DeFi, but is it really the kind of bullish, demand to use that we want, right? Does it exclude us? So yeah, I don't know about DeFi the next cycle. Maybe if these bulls get killed and regulations change and we have a pro-crypto party in the US next year, maybe. But as is right now, not too bullish, unfortunately. The next question is from Carnivorous Plants Garden. That's the name of the account. I actually this intrigued me, so I went to take a look at this account, and it's actually a fan account for carnivorous plants like Venus flycatchers, plants that eat animals and stuff, and it was fascinating. So if you guys want to learn all about the carnivorous plants out there, go and follow this account. But yeah, they asked why INJ is pumping so hard. Can it reach top 20 in the future? Yeah, Injective, man. It's been on one amazing rally. It's gone way over its previous all-time high. As you know, I'm a big fan of Injective. Talked about it quite some times. I'm an INJ ninja. I hold it in my portfolio, and we actually covered Injective a long way back in 2020 when it first launched. I remember doing the research on it then, and back then it was just like a DeFi, a DeFi DEX built on Cosmos, and I liked the idea of the interoperability and all that, and I was excited by it. But since then, it has expanded massively. So TLDR of what Injective is, so it's an open interoperable layer 1 blockchain for DeFi applications that's creating a plug-and-play solution for financial institutions to get integrated within the DeFi ecosystem, and for the developers to launch their own robust Web3 deep finance applications. So it's obviously it's highly interoperable, as I mentioned. It's built on the Cosmos SDK, which means it can use the IBC or inter-blockchain communication protocol to interact and interoperate with other ecosystems, Solana, Ethereum, Polygon, etc. When it comes to INJ more specifically, it's the utility token that's used to power this entire Injective ecosystem for protocol governance, dApp value capture, for staking, for developer incentives, and then also these coin burns, these auction coin burns. And that's actually an interesting point, because what's driving, I think, a lot of the rally now is a supply shock, because INJ 2.0 recently launched about 2 to 3 months ago, which is an upgrade to the Injective tokenomics, right? Which would allow for any dApp building on the Injective ecosystem to contribute to the auction fee burns. And they could even contribute up to 100% of transaction fees being burned. So naturally, what this means is if you've got a lot of transaction volume and use on the Injective network, that's going to obviously lead to a massive amount of fee burns. And if the fee burns surpass the issuance, you obviously have a deflationary currency, so it's kind of like a supply shock. So, ultrasound kind of money. This is potentially, a lot of dApps are building on Injective. It's like exciting one. For instance, I've talked about Helix for one. That's one that's been built by the Injective team. It's a very highly performant perp DEX. But there's also Mito, which is kind of like a portfolio adjustment protocol. There's Black Panther, Talus. I'll leave a link to in the description around all these other projects that are building on Injective, but it's a lot of them out there. And this is the goal, Injective becoming this completely new and exciting layer one ecosystem. I mean, there's over $1 billion worth of INJ that's been staked. I think that another reason why people are super excited about the Injective ecosystem right now is could potentially be some airdrop season. I mean, if you'd seen what's happened with Solana in terms of the value of some of these airdrops, people are now trying to think about where is the next ecosystem where all these airdrops are going to be taking place. And it seems like they're potentially coalescing around, could it be the Injective ecosystem? I think that there's a lot of exciting stuff happening on Injective. We definitely need to look to cover it again at some point. It's been on the coin, on the club, we basically have coin review polls where people can vote on what coins they want us to cover. And Injective has been there a few times. Unfortunately, it hasn't won yet. I just need to get more of the INJ Army members to come and help me upvote that one. Cool, so that's Injective. Yeah, amazing project, man. And the price action has been insane. My INJ bags are looking pretty good. So next question is from Marzo745 Ahmed. And he's asking, Coin Bureau Club not working in Dubai. The link shows not available in this time. And yeah, I think this is worth just mentioning quickly, guys, for everyone who's in a region that is not the Coin Bureau Club does currently not support. We want to do this by the book. We want to be registered and fully compliant in every single country the service is offered. So we're working very hard to include numerous different countries there in the new year. When that happens, if you try to sign up and you would have been greeted with this message, leave your email, and if we will get back to you the moment the club launches in your region or in your country. I think that ones that we're definitely considering or looking at for the new year: Singapore, Norway, UAE, and Switzerland potentially. But yeah, if you leave your email, we'll let you know the moment it launches, and we'll keep the same introductory price for you guys for a few months as we have initially for all club members in general. So yeah, that's just on some updates and developments on the club. We've got the final question here, and it's the most important question of the day. And no, this was not my alt account. This is from Sirius90864, and he's asking, how much you bench, bro? Well, I'll tell you, Sirius, mate, in the previous bear market, I'd just been benching all my heavy altcoin bags, and I'd been getting way stronger, and the heavier the bags got, that just increased my bench press capacity. So yeah, I'm much stronger now. My bench has improved considerably. But to answer your question directly, so my max one rep bench is 120 kgs. So that's about 270 pounds for you out there in America. Yeah, but the moral of the story here is bear markets will make you stronger mentally and physically. Cool. So that's all the questions we got for today, guys. Like I say, we try to. We get many of these, right? And sometimes we can't go through all of them, but we sometimes come back to the ones from the previous week. So if your question wasn't answered this week, we will try and come back to it later. Next week it will be I think it'll just be Jessica, because she's going to be the one holding the fort in Dubai. So I'm sure you guys are pretty excited for that, and we'll be asking for the questions next week as well. Again, Instagram will be linked to below, so if you want to submit your questions, go and follow us there. But yeah, until next time, guys, I will see you. Keep calm and hodl on.